And taking a look at everything from the big picture, you can of course pause or screenshot this right now if you'd like, and this will give you everything you need to know, but of course we want to dive a little bit more in detail on each one of these. So if you're looking away for your quick walkaway statistic for when you're meeting up with the people to talk about the market, you know, your average sale price right now is at $379,000 or right around $380. Less new came to the market from 2021 to 22, and even less came in the market in 2023. So yeah, there's not a lot of relief anywhere in the supply department of our market. And it's saying that, well, you know, a lot less have left the market. Again, not because properties aren't selling, but because there are not properties to be sold. And statistically speaking, these last few months of the year and into January are the lowest listed sale price ratios. What does that mean? You, buyers, statistically, you have the highest possibility of getting an accepted offer below your asking price for the entire year. If you listen to this first couple months here, that means you're closing in beginning of quarter two and into quarter two. But keep in mind, it's about 30 to 60 days to close on an average transaction, right? So if you get under contract here, you're actually going to sell here. Interest rates are starting to decline ever so slightly going into quarter four here in the Milwaukee metro area, meaning that housing is getting ever so slightly more affordable, thank goodness. However, inventory is remaining rather low, meaning that there is not a huge impact on the real estate market as a whole. My name is Jacob Sheets, your Wisconsin real estate agent, and myself and my affiliated agents cover the entire state of Wisconsin. So whenever you take in all this free content, decide you actually want to move forward on something at your own pace and your own time schedule, there is a link below in the pinned comment and in the description so you can get directly onto one of our calendars for a buyer or seller consultation. And lastly, before we dive into the statistics themselves, go ahead and please do leave a like, subscribe to the channel, and ring your notification doorbell below so you don't miss any of our future videos. Thank you so much for showing the love, and let's go ahead and take a look at the stats for the December market update in the Milwaukee metro housing market. All right, let's take a look at the quick year-over-year statistics. So comparing this year versus last year for November market stats. We have the active listings at 2,500. Last year at 2,500. It says up, but really it's pretty much the exact same. Looking at sold listings, we're at about 1,100, and about 1,100 says down 1.8%, but realistically off 20 listings, it's pretty much the same as last year. So actives and solds, so things that are still available on the market right now, right? And then solds, so things that have left the market, the amount that have left in November is the same as last year. So what does that tell us also real quick before we go forward is that the new listings that came to market also were going to be relatively similar, because if there was a bunch of new ones, we would have still leftover actives compared to what did sell. Okay, looking at the median price per square foot, up almost 10%. This is a little bit more of a significant change from these two statistics, from $173 per square foot to $189 per square foot. Months of supply from 2.1 to 2.2, up 2%. Pretty negligible there, but it's just saying that there's about 2 months worth of supply. You've heard this many times, but if there's 100 houses in the market literally right now, 100 that sold last month, that means there's 1 month of supply, because if no new inventory came to the market, it would get gobbled up in 1 month. So with that being said, in that same scenario, essentially would say that if 100 sold last month, there's 200 left now. That's 2 months supply. That's what we currently are at. Average balanced market is anywhere from 4 to 6 months worth of supply. In a normal market, people have said 6 months, but again, with how aggressive things have been, people are saying between 4 and 6 months. Now, median days of market, 21 versus 22. It's basically the same thing as well. So from compared to November of 2023 and 2022, this is pretty spot on of what it was like almost exactly last year. So not a whole lot of changes. Now time for the deep dive into all the statistics with a graph included all the way back to around the 2012-2013 range as well, so we can see trends and predict for the future. Great sales price. We can see the difference from this year compared to last year of all properties together of around 346 up to 379. That's pretty significant. As a reminder, this is average versus median. The slight difference there, but I usually like to skew more towards average rather than median. But anyway, that's up about $33,000, and for single family, it's up about that $29,000. For condos, it's up from 270 to 311. Woo! So that is an increase of that 40,000-ish range. So a again, steep increase across the board, but especially here we're seeing in condos. So if you're looking away for your quick walkaway statistic for when you're meeting up with the people, talk about the market, you know, your average sale price right now is at $379,000, or right around $380,000. And taking a look at everything from the big picture, you can of course pause or screenshot this right now if you'd like, and this will give you everything you need to know, but of course we want to dive a little bit more in detail on each one of these. So the amount of new listings, this is how many new properties came on the market this month, right? Almost exactly the same as last year at about 1,200 new listings hit the month, and year to date, so that's not just this month and November stats, but also like from January until now, how many came to market. That's what this graph is looking at. So it's saying that less new came to the market from 2021 to 22, and even less came in the market in 2023. So yeah, there's not a lot of relief anywhere in the supply department of our market. And looking at this from a graphic standpoint as well, over here from a line graph, we can see how this kind of like peak and valley, it always came up over around this 2,500 range. We just skipped that this year. We just decided we're going to peak up at 2,000 instead of 2,500, which means that, again, no shocker, we're very low on the inventory and options to pick from as buyers. Up next is pending sales. These are how many houses are getting ready to leave the market. So we have these past few years around 380 to 390 properties on market getting ready to get off market, probably in around this December timeline. And then this month we have about 400. So a little bit more getting ready to leave the market. What does that mean? Still coming up to the end of the year, we can project even just a tiny bit less inventory. We're talking about literally the difference of like 25 homes. So it's not like it's going to make that huge of an impact. Like, whoa, there's going to be this huge tsunami of stuff that left the market this year versus last year. I mean, it's more, it is, but it's not like astronomical. Now let's look at our closed sales. So these are the properties that actively closed and left the market, right? So looking at these stats year over year, went down a ton from 21 to 2022. And I was saying that, you know, less is leaving the market because there's less available, and there's just the same that left last year and this year, just about. Same thing here. Now this is saying that year to date, how many left from January 1st until this time frame. It's here at the end of the year going into December, and it's saying that, well, you know, a lot less have left the market. Again, not because properties aren't selling, but because there are not properties to be sold. This graph lines up almost perfectly with our graph earlier. You can see here the steep decline and then the leveling off from the past. It's the same thing here, just saying there was a steep decline. We can't really go much lower for inventory, so therefore there's not going to be much of a change here until eventually we get more inventory available to pick from. Super quick slide, days on market, everything's staying around 21 days on average on market before it gets gobbled up in an accepted offer, getting ready to close. We can see here, it's gone seasonal up and down every single year. We can expect usually a peak. We've seen almost no peak, again, because inventory is so low. So things are staying and cruising along at the regular speed here, which is 21 days, which is still a crazy short amount of days on market. Still a decent, strong seller's market, depending on your price point, which we'll get to a little bit later in the video. Median sales price, if you want to pause and take a look at this, feel free to. Otherwise, I like to focus on average sale price. And with average sale price, we looked at this a little bit more in depth on the first slide, broken out by condos and single family, but this is just everything grossed together into saying that the new average, again, like I said earlier, is $379,000 or $380,000. And where does that 380 compare to all these other years here? We can see we are right here towards the end of the year. Increase, 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 increase. You see a trend? It has been going up very steadily and consistently, especially these handful of years in this COVID crunch, I'll call it, and has really boosted our sales. Let's see what happened here. We had a dip and an increase. Most of these are mainly dipping down, dipping down. It's pretty abnormal that we see a dip and an increase, but I mean, I can probably chalk that up to the amount of sales that have kind of skewed it going a little bit lower in the October stats beforehand. So I think this is like, if you take this outlier out, it was still a pretty reasonable downward slope. So with that being said, I mean, I don't think that there's necessarily anything that's being communicated of a crash that's coming in the very near future. Next up is the always fun list to sale price ratio, and statistically speaking, these last few months of the year and into January are the lowest list to sale price ratios. What does that mean? You, buyers, statistically, you have the highest possibility of getting an accepted offer below your asking price for the entire year. Every house is a case-by-case basis. right? So you want your agent to reach out to the listing agent to go, okay, yes, we for sure can negotiate on this one. Oh, it's going to be a hot property, 7 offers. Don't go in under asking price. Don't be a dummy dum-dum. That's a bad idea. Now, if you're a seller, obviously what that means is that you need to be a little more aggressive in your strategies to go on the market, depending on your price point and how much inventory in your submarket that you have and in your community, your neighborhood, and your average days on market, so you can, actually get sold, hopefully, into this first quarter of the next year. And if you don't need to sell into the first quarter next year, you might want to hold off just a tiny bit to years listed after the new year and into like the kind of mid-January range, so you can hit right before the spring market really pops off here. We can always see it when it pops off. If you listen to this first couple months here, that means you're closing in the beginning of quarter 2 and into quarter 2. But keep in mind, this is about 30 to 60 days to close on an average transaction, right? So like, if you get under contract here, you're actually going to sell here, right? So all of our properties that are getting under contract now that are in this November, December timeline, they're going to be closing right in this range of, December, January, and almost into February. So sellers, again, if that's your goal, is to have that mad competition and highest likelihood of going over asking, as long as you don't ask crazy prices, coming up after this holiday market is going to probably statistically get the most competition coming up on your listing. Year over year, just for the month of November, pretty consistent, saying, yep, we're getting below asking price, this 98%. So if it were listed for $100,000, you probably get it for $98,000 on average. The year to date, we have 101%. So it's saying just an average, everything that's come together and sold from the year January 1st to now, it's saying that you've most likely had to go a little bit over asking to win that house, or if you're as a seller, you're most likely to, have made off pretty well when selling your home. Short slide, inventory for sale, there's not a lot there, right? So 2,500 properties for sale versus back in 2015, we had 6,000 for sale, right? All the way up to 8,000. That's a big difference. And we can kind of see it comes down. We see a little bit more of a decrease. We get one more month to go downwards here, so we can kind of expect it to go down pretty consistently, just like every other year has gone downwards. This is a little shallower of a slope, but nothing that was crazy, because last year, look, you were spot on at 2,500. You're at 2,500. This is a difference of 4 homes, so it's pretty much spot on of where it was last year, which again means low inventory. Months of supply, we already talked about this. I'm not going to waste your time. We're trailing around 2 months of inventory, flatlining out all the way back to 2020. So whether that means new builds or something else to shake up the market a little bit, we need more inventory in the Milwaukee metro housing market, period. All right, let's break it down by price point. We can see here, we've gone down. This is closed sales. So again, homes that are leaving the market, a little bit less than last year, a little bit less than last year, about the same, a little bit more than last year, a little bit more, a good chunk more actually than last year, going from 40s to 60s. A little bit more than last year here in the $1 to $3 million price range in our luxury price points. And the property types, all property, single family, townhouse. Pretty consistent. These aren't huge major things that worry me. Just something to take a look at in viewing our trends from year to year. Pending sales, so this is what's getting ready to sell in December, right? My main viewpoint on this is simply seeing that there's not a lot under contract in the $200,000 to $300,000 price range. And we see that there is a lot under contract in the $0 to $200,000 compared to last year. And this is kind of an interesting or head-scratching thought, right? So it's just thinking, what does this mean? It means there's less under contract. We know there's already low inventory, so that must mean that in the $200,000 to $300,000 price range, that's probably where we're going to see the least amount of new listings coming to market, or the biggest delta from last year, because there's less under contract and we're already low inventory. So it probably just means that there's just not enough, supply to feed the demand in that price range. We'll find out in the next slide if I'm correct or not. Continuing on, we have the increase also in the $500,000 to $700,000 price range. Days on market until the property sells. So selling quicker, selling a little longer, selling about the same, a little quicker, selling a little quicker, about the same, selling significantly quicker. Again, we have a lower sample size, so this will get a little skewed. So you really, again, have to go and see a case-by-case scenario for your neighborhood, because there are neighborhoods in the Milwaukee North Shore, especially too, Mequon, surrounding areas, where you'll have anywhere from 20 to 40 homes that are all $1 million homes. In that same neighborhood, you go 2 neighborhoods over and you have mainly $800,000 homes and $1 million property. Those are going to be two very different neighborhoods that should be treated very differently when looking at how quickly your home, when you list it, will actually go and get under contract. And 3 million plus range, again, case by case basis, 100%. Don't take this stat too seriously, considering we don't have too many 3 million plus range properties that are here on market. And if you aren't in the 3 million plus range here, go ahead and reach out directly to get the statistics, because you're probably going to be on the water, you're probably going to have a lot of acreage land, or you'll have significant historic importance of your property. So it's going to be very, very, very different. Don't rely only on the statistic. Get a lot more research on there to know how long your home might actually sell. There was one that was 3 million that was just on Lake of Michigan this last month that I went under contract pretty quickly after going to market. So again, case by case. All right, listed sale price ratios. So we can see here, you can take a hot second, look at this, are closer to the 95 to 98% range, and up here into the 100%ish range. And in the 3 million plus, you went over asking last year. This year is about this 93% range. So I'd say anywhere from 95 to 100, pretty normal. A little lower here in the first entry range of $0 to $100,000. Total inventory available. We'll see if we're right in my estimation in the $200,000 to $300,000 price range that we had a lot less inventory. I wasn't completely spot on. It was a hypothesis, but going down a little bit from the 519 to 504. So it's very interesting to see that the pendings are super low in this other price range. Maybe there might be a little bit more available, freed up. Obviously, take a look at your neighborhood specifically, but that kind of gives me a clue with the discrepancy of those two graphs that there might be a little bit less leaving the market than what is actually here and still available, which is pretty cool. That means you might have a potential opportunity in the $200,000 to $300,000 price range coming here in December. And finally, months of supply, right? So we're going to see, are we reaching that 4 to 6 months range for anything for a stable market? We can see here at 3.5, 2.6, 3.9, 3.7. So this is statistically saying we're still in a seller's market, a pretty strong seller's market in the 0 to 500, and an average, kind of seller's market, getting closer and inching our way towards a neutral market. And why did this go down, right? Well, from the prior years, you know this answer, because that same scraping the bottom barrel of inventory, well, there's people that wanting to scoop up homes, but they just don't have more inventory to pick from, therefore meaning that things are still kind of going off the shelves faster than they can be supplied. So are you looking to make a move going into 2024 here? If you're a cash buyer or you got some really phenomenal lenders like some of mine do, and you're very, very well qualified, maybe at this point you could still close before the end of the year. I got an FHA buyer actually under contract with some great terms that I can share after we actually close, to have about a 2-week closing so we can sandwich right between Christmas and the new year and get them into the home before 2024. Besides that, and you don't want to run super, super fast, we'll probably be looking at a closing in 2024, which is totally cool, totally good. My final recapping thoughts is that you as buyers, if you've been waiting for a long time, do not check out. This is your opportunity to get into a property, something that you like, that fits most of your boxes. If you're okay with the things that have been kind of left over, right, and haven't gotten scooped up in the market, we're not going to get a whole lot of new for you to pick from, maybe a little bit, but your list to sale price ratio that we looked at is saying that you statistically have the most leverage right now seasonally compared to the whole rest of the year. Inventory, you're not going to get a whole lot to pick from, yet at the same time, when you do move forward, you will be able to do so with confidence and most likely to get a good deal. But I do anticipate there to be lots of competition all across the board in all price ranges coming early next spring. Especially a lot of my lender partners have said that interest rates are likely going to go down more. Right now, at the time of the recording of this video, we're right around a super high 6, low 7% interest rate. So if the perfect storm does happen and we get into the springtime market and we have lower interest rates right at the same time, everyone else that you are waiting with right now to just hop into spring next year are going to flood the market at the exact same time, and you're going to have a tough time buying. Now, sellers, what this means for you too, if I'm being completely honest, if you're not in a rush, spruce up your house a little bit. Make it a little bit nicer. If you can get exterior photos done before we have snow, because right now we don't have snow, and it's looking good up until about Christmas time, and then we'll probably get a little bit of flurries. Get your exteriors done now and nice and pretty. So then when you hit springtime, if you need to list when there's still that slushy January snow and it's really gross and gray, you'd be able to use those exterior photos and then have interior photos that you could then get ready right before showings happen, so that people can actually feel the experience of those photos going through the inside. The outside, you can kind of paint the picture for them and help them see past all that white and gray that's outside. And like I mentioned earlier, if you are a buyer or a seller looking to get that type of advice or custom, like I said, case-by-case scenario information, go ahead, book that buyer or seller consultation onto either my calendar or one of my affiliated agents covering the entire state of Wisconsin in the link below, both in the pinned comment and in the description. And even if it isn't directly with me, I do get a benefit from referring you over to those other fantastic agents. And in the process, you're basically helping support me, my business, and this channel. As you're leaving, don't forget, you made it all the way to the end. So please, that means you like the video, subscribe to our channel, and ring a notification doorbell to not miss any of our videos, and leave a comment about what your thoughts are on these market statistics. Thank you so much for watching. If you want to look at our other content like neighborhood tours or Wisconsin highlights, you can go ahead and do so right now and enjoy the rest of our free content. See you next time.